All right, everybody, welcome along to the Tuesday afternoon market recap. Today's date is the 8th of January, 2019. I will say from the outset of this afternoon market recap that I am somewhat unwell. I've come down with the flu on Monday and it has progressively sort of gotten worse and worse. I'm struggling to sort of link sentences together at this point without sort of coughing my way through it, but I'll do my best to bring you, of course, a market recap, being very sort of outspoken, so to speak, in that pro analysis class, what we've been looking for. And as such, the market more or less is following exactly as we have been forecasting. It's really good to understand the golden rule, of course, when it comes to technical trading and understanding the big macro backdrop. All right, when it comes to the trend, that of course being that any given trend is assumed to be in effect until it gives us definitive signals that it has reversed. Obviously, contrary to recent public sentiment, all right, everyone has been shifting quite negative on the markets. However, what we have really drilled out, or at least seen here on my screen, are these decelerating fan lines. This is on the Russell 2000 to begin with, but this is also working in conjunction with the transportational average and the S&P 500. It does become a little bit even more bullish, so to speak, on the Dow Jones and the NASDAQ, because we didn't see a full correction all the way back into this final line in the sand, the primary bullish macro uptrend, which is really in the future going to differentiate between that of the continuation of this bull market, as you can see, off from this lower week in the month of December and following through into the first calendar trading month of 2019. At the moment, we're printing up 77 points on the Russell 2000. But above all else at the moment, you have to understand that we are still technically trending bullish, although we have seen the markets being relatively sort of bearish over the past 3 months, you could say. That more or less has come to a close as long as you remain above this primary bullish trend line. If in the future we break below this, and it's not a matter of if, it's a matter of when, it is ultimately going to fizzle and break below this, then of course we are going to begin shifting very aggressively bearish overall in terms of a real bear market, maybe at the later point of 2019, but probably, you know, somewhere in or continuing into 2020. Now, this is the chart again of the Russell 2000. I just wanted to show you how important it is to understand and recognize primary bullish trend lines. You can see the amount of white candlesticks. And also when I bring up these oscillating indicators, you can see the crosses not only occurring on the daily time frame. These are the oscillators. Most importantly, the MACD, of course. You can see the signal line aggressively moving above that of the slow line. Pardon me, there goes my voice again a little bit. But you can see the positive histograms moving away from that neutral point as well. So this is all supporting, of course, these bullish movements. If I take it out a larger fractal as well, you can see that we have technically been in oversold territory for quite some time. But when you look back at this correction, so to speak, was very much needed. What we have done is we've sort of flushed out again a lot of those overly aggressive sort of longs, or at least a market that has been overextended, especially to the upside in terms of it just being naturally overbought. What we've done over the past 3 months is flush all of that overbought sort of settings, or at least the sentiment as well as psychology of the market just drifting higher and higher and higher. We've flushed it out and we're more so moving back into neutral territory again, where we're beginning that of the continuation of the uptrend, which is really really optimistic, so to speak, when it comes to trade setups, okay, and opportunities out there in the marketplace. If you understand, of course, which direction to trade the individual stocks and also market indices as well. We've been speaking about this in Pro for the past couple of weeks. And as such, a lot of individual trades are triggering to the upside, and it's just continuing, of course, very nicely. Ultimately, I do believe we are going to break above the late October or September highs, depending on which market you're looking at some point in 2019, and we should see this bull market continue. We're just going to have to track that in due course. What I'd like to do also is just very quickly show you that of the Dow Jones transportational average as well. I'll start with the daily chart, but actually I'll go to the monthly chart and just show you these decelerating fan lines. Let me change the screen, the oscillators, remove them from my templates here. But you can see since 2009, we've had multiple tags on this rising bullish trend line. Again, the golden rule, a trend assumed to be in effect until it gives us definitive signals that it has reversed over the past 3 or so months. We have seen a very steep correction. Transportational average moving into, technically speaking, bear market territory. We did push beyond 20% from the most recent swing high, all right, or the calendar year high, or the year-to-date high back in 2018. We're seeming to bottom at the moment. You can see that we are respecting, of course, this primary bullish trend line. When I take it back down into the lower fractals, you can see when I bring up the oscillators that we are recalibrating, so to speak, out of oversold territory. We're crossing to the upside. When I bring up the weekly oscillators as well, you can see that we are nowhere near really moving out of oversold yet, which means that there is a long way for this market to go. Now, that is the transportational average and also the Russell 2000. What I wanted to show you also is the S&P 500. All right, because what we were speaking about back in Pro a number of weekends ago, it could have even been a couple of months ago now, was, well, when we look back on the calendar year of 2018, we were going to, or at least we were suggesting that it would be a year of consolidation, all right, a sideways moving market, consolidating a lot of the gains that we have seen really since 2015, 16, and through to really the end of 2017. Now, what this is doing at the moment, based on this rising primary bullish trend line, is that we're laying the foundation for what could turn out to be a very parabolic type of rally, a blow off top ultimately at some later point in 2019. But before we can establish that, we're going to have to move through, pardon me, there goes my chest again. But we're going to have to move into, or move beyond, that of the retest of multiple areas of resistance. In the past, and for the majority of 2018, this has been support, all right? And what I've been trying to sort of discuss, or at least make clear and make very evident to people, is that what's going to happen is that as we push on back up into, say, 2,600, okay, on the S&P 500, that's really the first critical sort of support turn resistance area. You can expect the market, once again, unfortunately, for volatility, V for volatility, to pick up. And what I mean by that is a lot of people are going to buy into the temptation that this is some form of a backtest and the bottom of the market is going to fall out. I've warned about this in the past, again, dating back a number of months, even potentially of this. If we were to see it happen, it has happened. But what you have to, I guess, find the courage to do is not actually buy into that. This is not going to be a backtest of 2,600, the kiss of death, and then ultimately the breaking of this bullish trend line, at least not in my opinion at the moment. We'll obviously monitor it, but really the insurance policy on the markets to the downside need to be below the swing lows that we established moving into Christmas, all right? I believe it was the 24th, where ultimately we did bottom out collectively across the board on these markets. So this is, I guess, the friend zone here. This means that this is the perfect opportunity to, again, accumulate long positions. Understanding, of course, that collectively across these markets, as we come back on up and retest these old support areas as new resistance, we are naturally going to fall under a little bit of selling pressure. However, that selling pressure is not going to add up to a larger bearish move. The majority of this bearish move is already done. In fact, probably the majority of it, if not all of it, has already been priced in. It would be a big surprise to see that the S&P 500 break below 2,350. All right, not looking at that happening, but at the same time, expect volatility to persist as we continue, of course, to climb back on up and retest these all-time highs. It's the same for the Russell 2000. It's the same for the Dow Jones Transportational Average. It's same, pardon me, for the industrial average and also the NASDAQ as well. You can see that we're coming back up into this old supporters resistance area. Phrased differently, I would be shocked if we didn't see selling pressure to potentially take this all the way back down to, say, 23,000. I mean, that would be very healthy for the industrial average to go through. Short term, it wouldn't be all that nice. Again, it would sort of make your stomach churn a little bit. But overall, we're not looking at this swing low taken out, and it will give you another opportunity to actually re-enter into market indices if you choose to do so, with your reward actually being back up here at the all-time highs, but ultimately above that once the majority, figure out just what's under construction at the moment. So I wanted to give you that update outside of the indices. I just wanted to recap a couple of stocks. Amazon has been absolutely fantastic for us, above 1,524. It's galloping up to 1,726. If you want to take some profits off the table, I don't blame you whatsoever. I do think it is a relatively intelligent thing to do. It is a relatively profitable trade at this particular point. So there's no, it's not necessary, so to speak, to actually hold it through to 1726, especially after what I just spoke about in terms of the indexes coming back up and retesting, of course, those old support areas as new resistance. That's going to flow into a bunch of these stocks that have obviously triggered to the upside as well. So it comes down to essentially trade management at the moment. Another really great stock that did hit our target was Netflix. You can see here $283.80 was the entry. The target was $316.61. That trade has run its course. Okay, so they're two pretty decent trades over the past 1 to 2 weeks that have worked out okay. If I go through the list as well, Apple technically did break above that 149 trigger today. If you did take the aggressive entry, look for the gap close. All right, up to 155, and then we're going to have to monitor that to see what happens. Boeing Airlines, interestingly, broke above 329 yesterday, 329.10. So again, that looks to be charging up to about 356. It came back down to 300 for the second time. That's what we've been waiting for. And now we're starting to see again, mixed with these oscillators. And the oscillators are a little bit of a pattern. It's a bit of a narrative across not only the markets, but also individual stocks after this big correction that we have been on into actually retest pardon me, those primary bullish trend lines. You can see right now that my health is sort of deteriorating as I speak into this microphone, so I won't speak for all that much longer. Baidu's simply moving sideways at the moment. Caterpillar, pardon me, boy, I'm really struggling to get this out. You can see it's closed this open window over here. We're starting to push above 129.25. We are moving into earnings season as well, so we're going to have to monitor that, obviously. COP, I'm really quite fond of this trade. A little bit surprised to see it shoot below 62, but again, this is still that primary bullish trend line, or at least that aggressive sort of trend line. You can see here we're still holding it. We've got a nice sort of white candlestick on the monthly time frame after that of a lower wick as well. So paying very close attention to COP. I think that can rocket, especially once we move through the volatility in the market itself. CVX, dashed dotted line. Personally, not in this trade, but looking to, I know some people are, and it's still profitable at this particular point, but we do have a little bit of a bearish candlestick during today's session. Just monitor that as well. Google we're staying away from because we are moving back up into this declining resistance area mixed with where the markets are priced at. It would be, I'm expecting anyway, Google to come on back down. Pardon me. Maybe not all the way down to $1,000 per share, but looking at this to move into some form of a Bollinger Band squeeze before it continues its upward sort of trend trajectory. We've got IBM. This is very important as well, dating back to 1993. You can see that we've had this bullish trend line in effect. There have been multiple occasions where we have overshot this, all right, albeit briefly. And what's most important now is if I zoom in into the current juncture, you can see that we've got, first of all, a little bit of a tweezer bottom here, even though technically not a textbook. That's a very large long day dark Morobozu candlestick prior to the actual tweezer bottom reversal. Obviously, this would need to be the size of the previous monthly candle, which it is not. Even if you look at the December candlestick, you can see that lower wick. And then building off from that in the month of January, obviously we're very early on in, but it looks as though we are going to ultimately hold above this trend line like we have in the past, and this is going to lay the platform for IBM once we move through earnings, all right, depending on what earnings do or how, of course, it's interpreted, just how it plays out moving forward. So interesting to sort of follow along with IBM. I mean, if that trend line gives, if earnings comes out and it's sold, I mean, hold on, because it could be a pretty steep drop. All right, but really not sort of banking on that. I've gone through Netflix, and the final stock here is Tesla. We don't have a trade on Tesla. Two dashed lines, looking at the gap fill occurring over the weekend. It happened yesterday on Monday's session. We've got sort of a bearish candlestick again. Ultimately, we're looking at this to move into another Bollinger Band squeeze and potentially lay a much-needed foundation and a support and a little bit of structure to begin setting up, once again, some individual trades on Tesla as well. The time's not right. If we do see that squeeze develop, it is going to be a pretty decent trade moving forward. So that's going to do us as at Tuesday. Sorry if my voice hasn't held up or for a couple of coughing fits there. Doing my best. I'm just going to sort of rest, recuperate a little bit, and hopefully this will pass. Hopefully within 24 hours. But we'll see. Other than that, everybody, I wish you all a very nice Tuesday evening. I'll be back with you once again later in the week to recap these markets. But a lot of important learning lessons for people to take away from trend lines and trends. Okay, the trend is a very powerful sort of macro theme underpinning this market. It hasn't changed. All right, we've gone through a seasonal correction, which is healthy. And now we're once again starting to continue off from that primary trend line, which is very important to understand. All right. If you have any questions, email me, success@pivotpoint-trading.com. Till next time, everybody, enjoy your night. Goodbye.